Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%. You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, what you need to do is learn how to invest the right way.
In our Learn Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals.
All right, how are you doing? Hope you're doing well. So I wanted to do this video to help persons who are investing to have, well, I call it the levels of investing. And when we built our Learn programs, we kind of built it with this like investor journey in mind. So I'm gonna actually be sharing that kind of framework with you in the hopes that it will help you to kind of have something to aspire to in your investment journey, but also to give you clarity as to what each new phase of your investment journey may look like. And so the idea behind this is that as you grow as an investor, then you actually should be, mastering certain things, right? So think of it as a natural progression. And hopefully this is a helpful video for you. All right. So if you have questions, comments, things like that, I'm gonna look forward to those, and then we'll take all the general questions, because I know that there are some things that you guys are gonna want to talk about and things like that. Right. So I'm gonna start by sharing the framework that we have, and this framework is actually important. Right. This is actually the foundation of our community. This is the foundation of our programs, the foundation of our level 1 course, level 2 course, level 3 course. We've helped people to make significant amounts of money with this framework, right? So just understand there's a depth to it, but I'm gonna talk high level for the purposes of it's kind of being shared with hundreds of people. So I'm not really going to be able to show you how it would be tailored to your individual thing, but I recommend that, for example, if you're brand new to investing, you start with the level 1 course. If you're already an investor, you consider level 2. If you feel like you've mastered level 2, then you should consider level 3. All right. So our framework, and this is a framework we teach people how to invest. We start with step 1, which is to look at your financial position. Now, this is important because this is going to answer a couple key questions for you, right? So you look at your financial position because many people jump into investing without necessarily understanding the state of their finances. So I want you to think of it this way, like your financial position will inform how you invest, when you invest, how much you should invest, whether or not you should be clearing debt first, whether or not you should be investing a certain amount. Like all of these things are important. So you'll have some kind of things that you'll accomplish through this process, and that's what we'll walk you through in terms of the level 1 course, but it starts there. The next thing that you want to do is kind of set some goals. Now these goals aren't static. Don't think you start investing 5 years ago, you set some goals and those goals will remain for the rest of your life. Your goals will evolve, your goals will be updated, but you should still start with having goals. All right. So I want to invest because, and answer that question, right? So think about what that looks like. Think about how you will be positioning yourself to accomplish those goals, and you should be investing according to the goals that you have. So for example, don't tell me that you're investing with the priority of income, but you're not focused on dividends. That would make sense, right? If you're investing for income, then dividends is going to be a part of that strategy. The next thing that you want to do after you set those goals is you want to look objectively and openly for your options. Now, what this means is that, and I say this to persons sometimes, that stocks may not be the thing that works for your goals. It may be that based on your goals, real estate may make sense. Based on your goals, fixed income may make sense. Based on your goals, starting a business may make sense. And so you want to assess your options in an objective way, in a emotionless way, if that makes sense. But you want to explore all the alternatives that exist that can help you towards that goal or those goals that you set. So this part is where you're looking objectively. Like, so some persons would like shut down certain alternatives automatically when it doesn't necessarily make sense for you to do that. It may make sense for you to explore the US markets because it provides maybe more opportunities to grow your wealth. It provides a hedge against the local currency, and things like that. But some persons may be like, US markets, it's too big, it's too complicated, I don't want to do it. You don't want to go about this step in that way. And you want to just kind of do it according to, again, what those goals were. The next thing you want to know is research those options. So once you've narrowed down the options and say, well, okay, I want to start with stocks, I want to start on the local market, you want to now become almost like an expert on it. So it would make sense that if you want to prioritize investing in the local market, why not invest your time in researching it well, in knowing it well, in understanding it well? A lot of persons kind of take this approach where they'll say, Jermaine, I want to invest, but I don't have time. I can't be in the market every day, or I can't this, or I can't that. You're not really invested in knowing that thing, right? You want to get to a point of almost mastery, right? Because if you're going to be looking to this vehicle, this option of investing to get you towards your goals, why not allocate time to it? Why not carve out an hour a week? Why not carve out 10 minutes a day? Why not carve out, the time that is required to research it and research it well, right? It's easy to allocate time for things that maybe fill your short-term need, but not necessarily your long-term ones, right? And the fifth step is going to be investing regularly. And when we say normalize, is that it should become like a part of what you do, right? Like, I'm always thinking as an investor. Like, when I walk into a business, I'm thinking, can I buy this business? when I see a store that's not listed, like I saw somebody eating KFC at work this week, and I was like, it would be good if KFC would list, because I'm always thinking as an investor. All right, so you want to normalize investing regularly. It doesn't mean that you're obsessed about it. It just means that it's a part of your daily life. All right, so that's framework. And now I'm going to kind of walk you through what each level of investing will look like. And this is where I want you to think about the level that it sounds like you're at. So if you're at level 1, think about becoming good at level 1, and then how you can progress to level 2, and so on and so forth. But level 1 is where you're introduced to investing, and you're all about now laying a foundation for wealth creation. So the foundation here is going through all the steps that we mentioned before, right? So those 5 steps I went through. You want to know your finances well. So for example, you can't have debt and not know the balance, and not know when you're going to pay it off, or not be prioritizing debt clearance. Because if you don't prioritize clearing debt, you're not going to be able to build wealth in a meaningful way. All right. You want to have some goals, clear goals, right? And let me actually go back to the previous step. It amazes me how many persons don't like take the time to master their finances, right? And when I say master it, is that you want to position yourself for for wealth, for your future goals, for the things that you said are important to you to accomplish. Because if you say to me, well, Jermaine, I want to build wealth, I want to retire, I want to do this, I want to do that. I work with you, I help you, we set out a plan. 6 months from now, you're not following the plan, then I'm going to question how important that goal was to you in the first place. Now, this is not from a place of judgment. It's more about, if the thing is important to you, then it's going to become a priority, right? So you want to lay the foundation, and it's something that requires like a new mindset, a new strategy, a certain level of consistency. I'll give you a simple example here. We have 1,300 persons who've signed up for our level 1 course, and only about 20% of them actually complete it from start to finish. It's a free course. It's 90 minutes. You want to invest, but you don't have 90 minutes to complete the course. But I'll see some person sign up to that course and complete it right away. Right? There are persons who will sign up to the course right now. Tomorrow they're asking questions. They've completed it. They've done all the steps, and they're like, Jermaine, I'm ready for level 2. Right? So for level 1, and these are the things you want to be able to have in place or accomplish with level 1. Clarity on your financial position. So you should know how much you can invest each month. Right? So you should be able to say, Jermaine, I have 50,000 to invest, but if I do XYZ, I'll have 60, I'll have 70, or whatever. But you should have that clarity by the time you get to the end of level 1. You want clarity on personal goals and financial goals. So it should be very clear to you why you're doing what you're doing. Right? Why are you investing? Why is it important to get a stock pick? Why is it important to invest right now and invest all your money now? Why? Right? And finally, you want to have clarity on investment options. So you should know, even if you're not investing in real estate, you should have a high level understanding of how it works, how much capital you'll need, what the returns will look like, what the costs will look like. If you're not investing in the US markets, you should understand what it entails, how you get started, because you want to have all these options of different forms of investments available to you, so that you know which one is the right one to take, right? So hopefully you understand this is the mindset of a level 1 person. A level 1 person is just looking to understand how it works, to understand the industry, understand from their personal position as well, their finances, their goals, being clear on that stuff, and then proceeding from there, right? And as I said, there's a level 1 course. So if you're watching this, you're a brand new investor, we have a level 1 course that can help you get started with this. All right. Now let's talk about level 2. Now, most persons I find kind of are in this place of being level 2, but they don't really master it, which is interesting, because there are persons who I'll meet who are investing for years. They have 10 stocks, 15 stocks, 20 stocks. We did a poll the other day. Some of you have 40 stocks. Level 2 is about having a clear investment strategy in order to build momentum. And my goal, my bar, is that you should aim for at least 10x growth. So whatever you're starting out with in terms of your investments, you should feel like you've mastered level 2 if you've gotten a 10x return on your investment. All right. So if you start with $100,000, 10x is $1 million. So you should turn that 100,000 into $1 million. If you start with $1 million, that should become 10 million. If you start with 5 million, that should become 50 million. Right? So have you positioned yourself for 10x growth? That's what level 2 looks like, right? Level 2 persons, like they're clear about why they're investing. They're clear about the type of investor they are. They're clear about when to buy, where to buy, all of that stuff, right? So they're not kind of in this place where they're chasing IPOs or chasing the stocks that are hyped, or they're not chasing at all, right? They have a clear strategy. They know what they're doing, and they're focused on building momentum, and they're by the time you get to mastery in level 2, you should be a disciplined investor. All right. So level 2 is about clarity on your investment strategy. So you should be able to tell me, Jermaine, I'm a growth investor. It doesn't mean that you only invest in growth, right? I want you to understand that as well. I'm an income investor, but I balance my portfolio with income and growth, right? So it doesn't mean that you only do that one thing, but your primary time and focus is gonna be the thing that you've set out as your strategy, right? Are you a growth investor? Are you an income investor? Are you a value investor? What's gonna be your portfolio sizing and balance, right? How many stocks you're gonna have? Which positions are you gonna build out first? How much money are you going to put to these? Because remember, the very first step is knowing your financial position. So your financial position will inform how long it may take you to build the type of portfolio you'd want. And then of course, you should be clear on how you're going to research, right? What conditions are going to drive the growth of whatever you are invested in, right? So for example, if you were to invest in a growth stock, what's going to make that growth stock actually grow? If you're going to invest in income stock, what's the yield of that stock? Right? If you're going to invest for value, what would that look like, right? So you have to kind of understand that, and you also have to understand the risk. What makes it a good strategy? What may make it a bad strategy, right? So you want to understand those things about it and move from there, right? So most persons that I work with, most persons that I meet are kind of at this place where they need to master these things. All right. So now I'm going to get to level 3. Most of you now should be focusing on getting to level 3, because as I said, most of you are probably in level 2 right now. So you need to kind of master level 2 and get to level 3. But level 3 is going to focus on what we call strategic wealth building. And it means that you have to, so I define wealth like at a certain net worth, but a certain capital allocation, a certain level of liquidity, a certain level of options. So for me, wealth is a very specific thing. I'm not going to get into this subjective thing like, what does wealth mean for you? I think those things are unnecessary. Wealth, I think, is objective and it's undeniable. If it's either you're wealthy or you're not, right? And if you're pursuing wealth, you have to pursue it a certain way, right? So level 3 persons are focused on strategic wealth building. You manage your wealth intentionally. You deploy capital through well-defined systems. So now you're building systems here to acquire wealth, but also to maintain wealth, right? So it's no longer just about trying to get a 20% here, trying to get a 30% there, flipping some stocks, or just doing a little side hustle or doing a thing here or there. It's actually having a system of wealth creation. All right, hopefully this makes sense to you, because this is what it's about. For everybody who starts at level 1, who starts their investment journey, you have to be headed somewhere, and I'm hoping that the goal for you is to get to wealth, right? So the portfolio or the goals for level 3, let me show you what those look like. Then I'll just take any questions or anything that you guys want to discuss. Otherwise, for level 3 person, cash flow is a priority. All right, so cash accumulation. So I'll work with persons and I'll say to them, and some of you who've been coached by me, you've probably heard this. I'll say your liquidity is low, or you need to get this sorted out, because the priority at this stage is cash. Right? Without cash, you don't have options. Without cash, you can't, pay down your debt. Without cash, you won't have money to live. So cash flow becomes of utmost priority in level 3. It's something that, again, one of the things we teach you in level 3 is how to maximize cash, how to ensure that, your cash flow is where it needs to be according to those goals that you'd have set, right? Your portfolio strategy looks different. So you're no longer trying to own 500 shares. There's this video that Kalila shared with, I think his name is Mark Barton, good guy, a guy that I speak to at a lot of AGMs, and he shared something that was very interesting to me. He said he bought 500 units of carb cement and it was $3.70. But I noted, and no, I don't know if he did this or not, but it stuck to me that he said 500 and he spoke about holding it, spoke about being patient, etc. But I was like, I hope that he didn't just buy the 500 and wait. Because if he only bought 500 and wait, especially at a price of $3.70, when it's now $112, that 500, and I did the math, 500 units at 112 is like 50 something thousand dollars or something like that, right? So I'm like, sure, he bought it at a great price, sure, it's grown significantly, but he didn't have any volume, right? I'd love to see his portfolio, by the way. So Mark, if you're watching this, let's talk, because I'd love to understand his personal investment and portfolio strategy. But the point here is level 3, you're focused on accumulation, you're focused on ownership, you're focused on like true wealth, right? And then now your investment style is going to be heavily research driven, thesis driven investing, I call it, because it can't be, again, you want to just jump in on a stock because the stock is moving, or somebody mentioned a stock in a YouTube video or on a TikTok or something else, and it can't be that. It has to be targeted, deliberate investing backed by research, solid data, solid outlook for the company, etc. Because the truth is, those are the persons who actually make significant money. Because again, somebody can buy 1,000 shares of Trans Jamaica at off of a sale, and a year later, sure, that's up almost 200%. Awesome. But if they were well researched, if they did a proper thesis, if they understand portfolio strategy, all of that stuff, they would have been adding to that position and strategically built it up so that right now when it's moving, it's a meaningful gain. All right, so I hope you guys understand what I'm saying here, where it's about, actually building wealth. That's what level 3 is about. All right, so that's the 3 levels, guys. I hope that this was helpful for you, especially those who are still trying to figure out their investment journey. There's more to this presentation, by the way. This is actually a presentation that I prepared for the level 2 accelerator that's coming up next week, Saturday. So that accelerator, the deck that I'm showing you here, is from that. And so those who have signed up for the bootcamp, you're gonna see this again, but we're gonna go to, there's like 10 more slides where we actually break it down in depth and to actually show how you tactically get there. All right, so I'll take any questions, comments, anything that you guys want to ask me, so I'll check the chat. You said in the next video you would explain why you don't like preference shares. Okay, so it's simple, right? Preference shares, some of them are tradable, sure, but my concern with anything like this is what's going to be my upside. Because remember, I'm clear, as I said in the video, about my investment strategy. So my strategy is income, sure, but it's also growth. And so if I buy a preference share, I'm getting consistent income. The yield is going to be higher than a dividend stock, sure, but I'm not going to get any upside, or not much upside. It may not be a liquid preference share, because I'm also investing for volume. I do not make an investment unless I'm able to own at least, depending on how the stock is priced, I'm not going to be able to invest in it unless I can own a certain amount of it. Let me say it that way, because I don't want to get into any numbers and scare anybody, right? Because I say Orville in the chat, right? But it's more about that for me. Jufo, I think, hopefully I'm pronouncing that right, but hopefully understand what I'm saying. All right, Tavares said I need to talk to Sagicor about a margin. Hopefully somebody from Sagicor is watching. I don't have control over that, but I'll ask. I'll ask the team for sure. But I'd love to get some margin from them as well, for sure. The Orville, whose money is called Orville. I mean, I have a modest portfolio. I have a few million units of a certain stock, but I mean, how much is that really? Who knows? All right. Yes, Investory. 40 stocks. We did a poll. Let me see if I can find that poll and share it. I'm gonna try and wrap this video up quickly as well. So that it's not a really long one, but where do I go? Did it close? See results. There we go. Yeah, so somebody has on here, I say 40 stocks, 33 stocks, 20 stocks, 30 stocks, 25 stocks, 24 stocks. So yeah, you have some persons who have a lot of stocks. All right. 40, I can hardly manage. I can only really manage 2 to 3 at a time. Same. Is Qantas a potential good dividend stock? I think so. I'm a little bit hesitant to say definitively because I haven't seen it since listing. Because remember, they issued more shares. I have to see what kind of profits they're generating to be able to pay a meaningful dividend. Because I mean, the yield that they showed us in the prospectus, I don't know if that yield is gonna hold true now. So I'd want to see that first, but I think it has massive potential. I saw the price go down. When I saw that price go down, like again, it's a kind of thing that, so it doesn't fit in my portfolio strategy now, but I was very tempting. I think I saw the price go down to $14, and I was like, that looks very tempting because it actually recovered. So, but I do think they certainly have the potential. Whether or not they're going to do it, I don't know. But I know that a lot of investors are waiting to see what they do because a lot of investors have bought it specifically for the dividend. Yeah, so it went as low as 14.10. It actually went down and it's back down. Okay, interesting. So it went to 14.54. So it went down, recovered, and then it's back down again. So I'll see. Do you think woodcats can grow? When I say grow, meaning the company. Can the company grow or can the stock grow? Because those are two different questions. I'm gonna assume that you're talking about the company and the stock. So I think so. How soon they'll do it though, I don't know. How soon they'll do it, I don't know. How does Jermaine go about selling shares, if you can speak about that? Kim, I don't know how to answer that question. I mean, I sell my shares just like everybody else. I take really long to sell. I'll say that. I'm never in a rush to sell. I saw a lot of persons saying, boasting about taking profits and stuff like that. I'm like, that's good. But you notice what I said on the level 2 slide is that I'm looking for 10x. And so I don't always get 10x, but I'm saying I'm not somebody who settles for 20%, 30%. I look for massive gains. I look for something that can either give me 50% or more on my capital. And I'm going in with a lot of capital as well, usually. And this is a strategy that I've learned even when I just had $1 million, $2 million in the market. I would invest in a particular way to ensure that my capital is growing because I want to ultimately use my investments to replace my regular income. All right. How do you keep yield low when you want to take cap gains profit? Humble boss. That's a level 2 question. I'm sorry to say that, but so what I would say to you though is, if you're worried about cap gains and profit, I wouldn't also worry about yield. You can't have it both ways. That's what I can say, but we actually discussed this in level 2 last Saturday. So if you're in level 2, if you missed that discussion, just watch it. If not, just, that's because there's a kind of lengthy explanation to this where we're talking about it as a group. So some persons don't understand, like they're worried about things like average price, etc. and stuff like that. If you're taking cap gains and profits, I wouldn't also be worried about yield. The two don't go together. What's the difference between THJ, or I'm assuming you mean TJH, and the preference share? I mean, the preference share is debt. They pay a certain percentage based on the original price. They pay 8%. That's why it says 8.0. And it's just a different security altogether. Preference shares get priority in terms of repayment, so they get their dividends first. It's something that they're paying down, so eventually that the current dispensation will be done away with. Who knows if they'll take on that in the future, whatever, but they're the ordinary shares, and then there are the preference shares. Two different securities treated two different ways. All right. When is the date? What date are you referring to? And time for I have an interview. Okay, that's going to be tomorrow, but it's not going to be a live interview. I'm going to actually record it. I don't know if I'll release it tomorrow yet. It depends on how long the conversation goes and things like that. But I've been trying to get, like, I literally have to say Ivan at the AGM, like, you kind of owe me an interview, Ivan. It's been a while. I've been waiting for a while. So he said, okay. And so he agreed to tomorrow. What I was thinking of is to see if I could have some members of our community join, but I have to ask him permission first if he wants to do it pre-recorded, because if we have persons join asking questions, it may be a really long interview, which I have to be mindful and respectful of his time. So I'll see. But if you're in our community, we'll probably send a link there first and so on, which I think you are, Arvel. I think you're in level 1. All right. So it's set for tomorrow, but I don't know when it's gonna be published. All right. How does your investment strategy change when your dividend stocks give you considerable cap gain? I think I saw this question somewhere. You've asked this already. I think you have, right? Or I think maybe you asked it on the last stream and I didn't get to see it. So my strategy doesn't change because I factor that as a part of my strategy, right? Hopefully that makes sense. The reason why I chose income stocks is if you used to watch our stocks to watch episode, I said this back in 2021, 2022, that for the next, and I gave it 3 to 5 years, for the next 3 to 5 years, the market is going to prioritize income producing stocks, dividend stocks, because we're in a market where cap gains aren't going to be guaranteed. I said that in 2022. 4 years later, the stocks that have gained the most this year, outside of West Indies Petroleum, outside of JetCon, have been NCB, dividend stock, Carreras, dividend stock, Trans-Jamaica, dividend stock. All right. So my strategy doesn't need to change because I understood that dividend stocks are going to give me considerable capital gains. All right. I understood that as a part of my dividend strategy to begin with. Right, so hopefully that makes sense. All right, you'll be interested to understand the profile of someone who purchases 10 plus stocks. I mean, it happens. At one point, I used to buy every IPO. I'm waiting for a target price. Another one comes out, I'll buy. Another one comes out, I'll buy. I don't necessarily think about when I'm selling because I'm waiting for them all to get to a certain price. And then over time, I had like 20 stocks. I think one point I had like 22 stocks. All right, so it happens. All right, it's something that once you start investing with a clear strategy, it should not happen, but it happens. Do you have a selling strategy? Absolutely. I think we all should. Who owns JSC Orville? Who are you talking about? Okay, I don't know what you guys are talking about. What motivates me to sell? It depends, right? Selling is a part of my strategy as well, meaning I have to sell. I have to take profits. I have to reinvest those profits. I have to continue to grow my portfolio. So my strategy is wealth accumulation. So I focus on, so what you see me show in terms of level 3 investing, that's what I do. So cash is a priority for me. So when I'm investing, not only am I deploying a lot of cash, but I'm also ensuring that I'm getting back a lot of cash, right? So for example, I'll sometimes sell and take profits, millions of dollars at a time because I'm prioritizing cash. When I take that now, if I wanted to, for example, buy a car, I could buy that car without having to take a loan. If I wanted to put down a deposit on a house, I could do that without having to worry about where the deposit is going to come from. So, so the the motivation for selling for me comes down to what I want to accomplish with that money, or what I would have earmarked my next set of profits to be able to do. If I don't have anything external to do with it, then I'm just trying to compound that money. All right. I realize only a few companies are doing earnings calls with LGI. What's up with that series? That series is still there. That series is on our other YouTube channel. We have 3 YouTube channels. We have this one, we have the Investor Relations curated channel, and then we have the Grow Your Wealth channel. Not every company wants to do an earnings call, unfortunately. Some companies prefer, and I'm saying this, I know at great risk, that a company may see this and not want to do the earnings call with us. But I find that most companies, when you invite them to do an earnings call, they would prefer to do it when earnings are good. The companies who work with us now are the companies that I find, good or bad, high or low, they're willing to do the earnings call because they're caring about the communication with their shareholders first, and not necessarily about the fact that they had a great year or they had a great quarter. So it's a very hard series to maintain, as in when we just started it, we were hoping to cover at least 30-40% of the market, because there are some companies who host their own. Cygnus does theirs, Varita does theirs, NCB will have their own investor briefing. Some of those companies, they wouldn't need us, but there are a lot of companies who don't engage their shareholders at all. And so we saw it as an opportunity to have a platform where 15,000 investors following us on YouTube. We thought it would give the companies an audience to help to engage their shareholders, hear from their shareholders. And it's something that at one point we were willing to just do it at a price that was comfortable enough to get them to keep doing it. But the ones that have stayed with us, Image Plus, Dollar Financial, RPL, those companies, I hope I'm not missing anybody, but those companies have been faithful in doing it. They've done an earnings call consistently for the last 3-4 years. And that's why I'll say to some persons that I'm not surprised that the sentiment for these companies are so strong, because they make the time to engage with their shareholders consistently. All right. Do you have an interview with Atlantic CEO anytime soon? I have his number. I'll message him and say I don't think he was opposed to it. I don't remember if I asked. So I'll reach out and see. All right. Bought TJH at IPO price. It's up a ridiculous percent, but it's unrealized gains. I'm battling with the thought that it'll go higher versus exit now because I'm being greedy. I mean, I don't know what to say to you there. That's a personal decision, right? So large and priority purchases. Thank you and appreciate it. This is Mark Fletcher. Okay. Mark, this is something that you could have gotten like weeks ago, but just understand that there's a right way and there's a wrong way, right? But I mean, my strategy has always been volume, right? I've said that here before. All right. Real investments, life, money talks. Oh, yes, sir. After 30 years plus in this world, it's late last year up to now that I'm truly seeing the effect of what compounding looks like. So I've shared this. So there's something I shared with our level 2 and level 3 community. And this is something that, blew their minds. I said to them that one of the things that we're introduced to investing with is this idea of compounding. And I want you to understand that compounding as it relates to investing is not automatic. and I'm going to say this, and I'm going to sit up because I want everybody to listen to what I'm saying. I'm sure you've all seen, you know, compounding is the eighth wonder of the world. And when you invest, your money compounds. If you put 100,000 down, you get 10% every year, then you'll have X amount after a certain time. That act of compounding is not automatic. It doesn't happen without you doing things like taking profit. It does not happen unless you do things like reinvest your dividends. So I want persons to understand that though you may be investing with the expectation that your wealth is compounding, it is not. It is not an automatic thing. You have to actively compound. And I hope somebody catches that, because it's not automatic. All right. I saw Image Plus doing it even when they had exactly. All right. So I think I've spoken to countless CEOs. We've spoken to them about the earnings calls. They know that we do it. They know that their audience, their shareholders would value it. It's just one of those things, right? So in the US, I've seen on Yahoo Finance, CEOs, they just had a really bad quarter. Sales are down. This is bad. They have a lawsuit going. The world is ending, and they're on there answering questions. They're talking about the company. They're talking about the way forward. They're studying investor concerns, and they're getting ahead of it, right? Our culture is a little bit different in that we feel like we should only say something if we have something good to say, and it's probably something that we grew up hearing, right? Don't say anything unless you have something good to say. That maybe that's lodged in some mindsets there, but I think it's a very important thing to do. I think every single company that is listed should do an earnings call. Even if they're not doing it with us, I think it's a necessary thing to engage shareholders, to inform shareholders. Imagine the only time an investor sees you is at the AGM, and that AGM is going to be at a hotel that can hold maybe 50 people, but maybe you have 5,000 shareholders or 10,000 shareholders. So doing it on YouTube, doing it with a platform like Learn, Grow, Invest, and you open that up to all your potential investors and existing investors, right? So I think it's just something that more companies should do. What are your views on TJH8? Why is it moving so slow in growth? It's a preference share, right? So if you caught my comments on preference shares earlier, it was not actually designed to grow, though it has grown because it is tradable. So it's not meant to grow. It gives you 8% interest on its original price, and that's what it was meant to do. So hopefully you didn't buy that thinking that you're buying the ordinary shares. All right. Thank you, sir. What's your opinion on the dividend paying stock Mailpack and their company? I mean, I like Mailpack. I think I love the leadership in terms of Kari. I think he's a good businessman. I think that a company will be stable, consistent. They will continue to grow. A few things that are happening around the company now that I think may be a little bit unfavorable for them. I think that's why the stock has not been growing. But long term, I think that company will be just fine. I expect future acquisitions. I expect, like what they did with My Cart Express, I expect things to get to, a point of recovery is what I'll say. I catch you when it's possible asking for a better understanding of selling. It's hard to explain selling strategy on YouTube, Mark. It's selling strategy is something that it's a little bit nuanced, right? It'd be dangerous for me to share selling strategy on YouTube with 110 people, and then everybody kind of assumes that I'm saying one thing, and then you go off and make things worse for yourself. With great power comes great responsibility, right? So because I just watched Spider-Man last week. So there are some things I won't say on YouTube because it would be careless to do so. All right. Any thoughts on Kintyre? No thoughts actually. None at all. All right. All right. So I think I've answered all your questions, guys. Let me check on Instagram. So Kerrick says, you mentioned that there's a strategy to see consolidation, how it happens, because timing the market is close to madness. Yeah, but again, that's the kind of thing that's not a YouTube explanation either, Kerrick. I mean, there are things to look for sure. There are things to look for when a stock is getting ready to correct. And that's why, for example, I would have held to a certain point. I won't say if I'm still holding, but I would have held to a certain point, because when person said, they took profit at 8, they took profit at 9, they took profit at 10, I'd ask them, did you look at the queue? Because when I looked at the queue, I'm like, no, there's no correction in sight. So I certainly thought that it had more to go. Of course, breaking through I thought $10 would have been a big psychological barrier. Clearly it wasn't. Right. And so it pushed past that, and we've been seeing growth from there. So yeah, man, there's certainly a way to do it. VMIL, I mean, VM is special to me because it was my first investment. My first IPO was VMIL. That was the first investment that Renee and I made in the stock market. We put our $600,000 in savings, everything we had, into VMIL at $2.33. I sold most of it at $3.45, and so that was our first profitable investment. In terms of currently what they're doing, I think they're certainly facing some headwinds for sure. And I think that they'll just take some time. They had some rough kind of stretches there, if you've been following what's been happening. So it was more about just to see them kind of steady things now and grow. I think they have some great persons leading that, whether Rez, and I think Alison is there and stuff like that. So I think VMIL will be fine, but it's just one of those years. Most of my investment is in TJH, and I'm about to double down on it. Okay. What's your view on JBG? And I'm assuming that's whipped. I don't know. I need to look at the most recent numbers. I was very hopeful for the company before it listed. I still remain hopeful. Not currently a shareholder, but I think there's promise for sure for that company. Jamaica Brothers, to me, I'm giving them time, right? I love the company and what it stands for. I think that, especially the Christian leadership and stuff like that. But I think they are still in the process of recovering from what would have happened. So if you're trying to look at it as a long-term stock, I think that's reasonable. Certainly not something that you're gonna get significant upside from in the short term. Remember, before this, Jamaica Brawlers was trading consistently between $30 and $40. I think at its peak recently it would have gone up to about $45. It's at $14 the last time I checked. So that should tell you how the market sees it. All right. You're watching the queue for the death signal. All right. Let me know when you see it. Let me know when you see it. All right. I know what I'm looking for. And I mean, I'm very. I said to somebody that we are the wealthiest we've ever been. Right. Our net worth has significantly gone up. And again, it's the same strategy that I'm talking about here. Right. The things that I teach here, the things that I talk about on this channel, are the things that we do. I'm not making up content to share. I'm not creating stories and sharing. What I'm sharing, what we've always shared, is what we've gone through. Renee and I, our premise for content is sharing our own journey and hoping that others will learn from it. So investing has been the source of our wealth. We started $2 million in debt in 2013, 2014. Started investing in 2016, 2017, and investing has changed our lives. Right? We've also been careful to limit our debt. So the only debt we have is this house. You see me sitting in here. And the car that I drive, the car is a 7-year-old car. It's brand new. I bought it brand new. I have 1 more year on that loan to pay, and then I'm free. And then the only debt we'll have is this mortgage. We've decided not to take on any new debt. We've been, we wanted to buy a new car. We're like, no debts. We wanted to maybe take on another investment property. We're like, no loans, no mortgage. We decided to invest instead. So we sacrificed the last few years. We sacrificed our desires to invest instead. And now I think this year we've seen significant increase in our wealth. And so we're happy that we made those decisions that we've made. And now we have options. We have options now to be able to do things that we couldn't do 2 years ago, couldn't do 3 years ago. And of course, that's the power of investing. That's why we invest. All right. We're discussing the levels of investing. So I hope it was helpful for you. I hope that you were able to get through it. You also said that you take a look at the KW announcement. I did not get to do that. So send me a DM, Kerrick, so that I remember. And I haven't looked at last time either. I've been preparing for the level 2 bootcamp. What's your view on Atlantic? I can't talk about Atlantic now, Empress, but check my next video. I'll try to touch on it. All right. Can buy the car. I could have bought a car cash a long time ago. I chose the current loan that I have. We sold our former car. We chose to invest that money instead of applying it to the new car. So again, level 3 investing, cash flow is a priority. So I would not buy a car cash unless I had enough capital to do all the other things that I want to do. So that it's a nice flex, but it's not something that's really important to us. Like the car that we have is gonna serve us for a long time because we bought it brand new. So it's 7 years old and it will serve us hopefully for another 10, 15, 20 years. Because the priority is to be able to build wealth. And so a new car, all of these new, I'm surprised the number of new cars I'm seeing on the market, but I'm not surprised in the sense that if you guys don't understand that what you're trying to do is take your best income earning years by having you take loans, like that's the model. That's a business model. The business model is to get us to take loans. The business model is to get us to live above our means. The business model is to get us to reach or overreach rather for things that we can't necessarily afford, but we can finance. We can finance with credit card. We can finance with loans. We can finance with certain things. And most of the clients that I work with who are struggling to really accumulate wealth, it's typically debt that's holding them back. Right? Because debt is a once in a moment decision that you pay for many years to come. I decided to buy a car in one moment. I was driving one day, sharing a car with Renee. The thought came I should buy a car, bought the car, I'm paying for it 7 years later. So debt is an instant decision that you make that you pay for a very long time. All right. Sorry, I went on a little rant there. Jamaica politics, I don't think you need level 2. Based on what you've been saying in the chat and for months now, for years now, etc. I think you sound like a level 3 investor to me already. But in case you're interested, level 2, you can pay for either the monthly option, which is $8,000 Jamaican dollars per month, or you can take our level 2 accelerator, which is next week, Saturday. The cost works out to about $57,000 for the whole day, or 360 US. We did have a special on it, but that special has ended. We had 30% off, then 20% off. So there's just the full price now. And that's the cost for level 2. But based on some of the things you've said, you kind of implied that you're not really a level 2 investor. But if you're interested, send me a DM and I can send you the link to sign up. Exactly right. Not surprised. More and more. So an auction, no, somebody can fall on hard times, right? Melissa could could happen and then it wipes out your business. That's different. People typically make decisions like that on impulse. And so I was speaking to somebody once. The person really wanted to invest. Then I came back and checked with the person later. They decided to buy a new car instead. So it just, so instead of now investing and building wealth, the person has taken on debt. So they're going in the opposite direction, right? This is the way the world works, guys. It encourages us to take debt, right? But guys, please just bear with me. I'm very passionate about this topic, and so I've seen the impact of debt. All right. Kemar says, if someone is in their 20s, how should we balance equity versus cash accumulation? If you say equity, you're meaning like in a house. So what I say may not be seen as a view that's shared by many. I think as somebody who's in their 20s and 30s and 40s, your priority should be capital accumulation and liquidity, right? Building up equity is great. I have equity in this house right now. It's awesome. It's wonderful. I can't take it to the supermarket. I can't pay for my bills with equity. What persons will say, well, you can take a home equity loan. That's nice. That's another loan, right? So I would prioritize liquidity. I'd prioritize capital accumulation. I'd prioritize not taking on debt. And then, because I work with clients in their 20s who have been investing, and we have multiple persons in their 20s in our level 3 program. Those persons now are going to have so many options because they're investing consistently. They're not being bogged down by credit cards or bogged down by mortgages or bogged down by car loans. They're just investing the money that they're working. So they're building wealth certainly a lot faster than I did, right? So I'm looking for any more comments. Buy now, pay later for sure is the American way, right? All right, guys, I hope that this session was helpful for you in terms of just the levels of investing. Again, just think about how you'll grow as an investor, right? The point is to not be chasing the market, chasing stocks, trying to figure out what's the next hot stock. You want to go into investing with a clear strategy, clear focus. Now, I'm not saying we're here to help everybody, because some persons certainly can learn for themselves. But if you need help with investing, that's literally how and why we built our programs. So we have our levels 1 to 3 to help you invest. Level 1 is completely free. It's 90 minutes. I think 90 minutes is a short amount of time to invest to get on the path to wealth creation. Once you master the state of your finances, you understand what your goals are, you get the basics down, you can prepare for level 2. I've heard some persons say that they've gotten back 10x returns on their level 2 investment. Some have done a lot more, right? I had a level 2 student this week saying that he's been taking profits consistently from TJH as it's been going up, applying what we would have learned. Now, I didn't tell him to buy Trans Jamaica. I didn't need to tell him that, right? But he applied what he's learned. He now has made, he said he's made more money this year than he's made the entire time he's been investing. And he's just been in our program since January, right? And he's been investing for at least 5+ years to this point, all right? So if you need help with level 2, that's what we will do for you. When you've mastered level 2, then you can worry about level 3, right? A level 2 investor should be able to start from 100,000 and get all the way to $5 million at least before they're thinking about level 3, right? If you're just starting out $1 million or less, $2 million or less, I wouldn't worry about level 3, because sure, you may learn some things, it may help you, but it doesn't make sense, because it's clear if your portfolio is that low, you would not have mastered certain concepts, right? So there are persons who will say to me, well, Jermaine, I know the basics, I've mastered the basics, I'm making money. I'll say, well, how much did you start with? How much has that grown? Right? How much have you made in a year? How long have you been investing? So if you've been investing 3 years, 4 years, 5 years, and the only stock you can point to is say, well, I bought TJH, and that's it. You're not that's not enough to show, right? I bought TJH and that's my strategy, right? No, it's no, right? So again, it's not about any particular stock. You need to show that you have the ability and capability to consistently grow your wealth. I've said this before. The things that surround TJH now, that's making it do so well and go so well, won't always be there. So for those who are kind of hiding behind that stock to get most of their gains and most of their profits from investing, at some point it will not be able to do those things for you. What then? Right? And then of course you think about next going to level 3, where you're now building wealth for yourself, building wealth for your family, thinking about generational wealth, thinking about getting from 5 million to 50 million and even more, right? So that's the levels of investing. Hope this was helpful for you, and I'll definitely see you in the next one. All right, let me take some final questions here. Was at the expo recently and everyone's favorite bank was hosting the sale. Okay, I think I know what you're talking about. Someone was asking how to identify broker institutions order. I share the same sentiments. No comment. I've heard a lot of hype around Wigton. What's your views on it? I'm not bullish on Wigton right now. I'd say that I'm not bullish right now. Not for me, right? I think the premise behind the company is good. I think it's certainly something that the country needs. I'm not sure it necessarily makes let me choose my words carefully. All right, you're welcome. Can someone outside of Jamaica invest? For sure. So I can help you with that. Just DM me on any platforms and I'll help you get started. Investing from the US, that's awesome. TJH minting millionaire, it's minting millionaires, but then what? What's gonna happen to that money? How are you gonna invest it? When are you gonna sell? Like all of those questions now come up, right? Because I remember, and I'll say this story in closing. A few years ago, I don't know if you remember this, Orville. My advisor told me to buy Blue Power. I've shared this in our groups already and stuff like that. My advisor told me to buy Blue Power. This was before I understood anything about investing. I purchased Blue Power at $5. It went up all the way to I think $17.50. I had at that point made the most money in unrealized gains that I had made to that point, right? And then now I didn't understand what to do. I didn't know when was the right time to sell. I didn't know whether I didn't know what I should do, because when the advisor gave me the stock pick, he actually left. I wasn't able to get through to him, I think, or he left one out of those two. And I remember Blue Power went down from $17.50 all the way back down to below $5, the price that I bought it at. Now, I'm not saying that's going to happen here, but the point I'm making is it doesn't make sense to have all these unrealized gains and I don't know what to do with it, right? So person should understand what they're doing. Person should understand and have a strategy to investing, and that's what, again, that's what we help persons to accomplish. All right, I think that's it. Hopefully you guys enjoy the rest of your holiday. Last sem I can't touch on right now, sorry about that. That's for another time. Enjoy the holiday weekend, guys, and have a great rest of the day.
Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%. You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, what you need to do is learn how to invest the right way.
In our L.E.A.R.N Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks, are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals.